Alright guys, it's Wednesday and we halfway to Friday. That's where the NFP, the big news of the week, well, the biggest news of the week, because we do have a few big news tonight as well from German on Europe and on US. We'll be touch base those ones in just a minute, but first, subscribe to our channel. Please give us a thumbs up on this video. Yesterday we had the webinar. It was very nice, and we're already planning, we were discussing with everyone present on the webinar yesterday that I will be teaching a strategy, how to build up your own strategy on a market environment that really works towards the fundamental, and how you proceed that after you have the fundamental. What do you do with that, because it's all data. So how do you synchronize this data towards the forex market, and then how can you place those positions in? So next Tuesday, don't lose, don't lose it. I will be there again 6 p.m. to 7 p.m. on Sydney time, Australia time. It's free, out of charges. You can just subscribe to on ACY Cloud on our portal, all right, or on our website on the Learn tab. All right, let's go to the video now. Okay, so we're gonna have tonight at 10 o'clock a very important news from Germany, and it is the German CPI year over year. We are expecting 6%, so we are expecting from last year to this year a 0.2% decline on the inflation. So if that really happens, that will be negative for the Europe. Well, it will be positive for the economy because it's inflation coming down and people can, spend more, and the inflation will come down, of course, and it's good. That's it. But it will be bad for the currency because there are other countries that has high inflation, higher rates like US, and it's more attractive. Investors feel more attracted by those currencies that has a higher inflation. That's why the central bank has to keep raising rates, as already explaining lots of videos here. As well, at 10:15 we're gonna have the employment change, ADP, right? And then at 10:30 we have GDP quarter over quarter for US as well. The consensus is that we had a growth on the quarter 2 for US, right? So we're expecting 2.4%. The previous was 2.0, so we're expecting 0.4% increase on the production of goods, on the spending, on the growth of domestic products, basically, right? So everything that was produced into US has a growth on quarter 2, so quarter 3 now, nearly quarter 4, stepping into quarter 4 now. We have a pleasant news for US. If that really happens, if it comes 2.4, it will be positive for the US, but won't be that much positive for US dollar. I only see a very positive instance if it comes much higher than 2.4, let's say 2.8, 2.7. I think it will come as expected, 2.4, because yes, we are having a bit of a resilient economy on US, but I don't expect a huge growth from them as I was in the beginning of the year. Just a heads up now, the commitments of traders, that is the COT report, have changed from positive to negative net percentage positions. So what that means for US is that the funds, the hedge funds, the portfolio managers, all the big companies, corporations, they're changing the positions they had long on US dollar to short positions on US dollar. Right. So I'm gonna send you to our editor so that he can put it up on the image here, and you guys can see what I mean by that. So we have to pay attention very close to any pairs that has US dollar, and be careful to always long it, only long it, and assess or risk towards those fundamentals and those economic data that are coming from US from now on, and much more attention. All right, guys, so again, please subscribe to our channel, give us a thumbs up, share this video with your friend if you have any traders friend, and I see you in the next video.